Hello, 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 everyone. Oopsie. I got so excited today. You know what I forgot? There we go. There we go. There we go. I forgot the green screen. Hey, sorry. I got, I was flummoxed. I always thought markets go up. It went down. I forgot the green screen. What is going on this afternoon, everyone? Hello, all my bearish friends. Good afternoon, Amit. I love days like this. I've been able to catch the video, but it looks like Powell gave some big. Well, he didn't mince many words. Neither did he. Don't just all put this on Powell. I know that was the one. But none of the other Fed speakers today minced words either. I mean, they were slightly different, but it was like, hey, we're raising rates. They're staying there for a while. We're not going to try to get in a position of raise, cut, raise. Inflation, because you got one print, isn't, yeah, it reduced on one print, but we are making sure that we kick the crap out of it. And yeah, we're expecting unemployment. I think they just sort of said it a little harder, and Powell's sort of like, hey, let's keep this short. Guys, we're raising, whether it's 50 or 75, we're raising. We're going to knock the crap out of inflation. Unemployment's going to go up. You know what? Deal with it. Yeah. Today the market was go gadget stretcher. Well, for the bulls, it was stretcher mode. This is what we need. It's healthy. Need to wash out to flush the crazy behavior. Just in time for September. Good afternoon, Patrick. Amadeus, thank you again for being here. Oh, yes, it was fun. All the bulls I follow were in total disbelief and buying calls at 8 a.m. I'm thinking, yeah, you haven't been listening to my friend Michael. Thank you. Thank you. And I appreciate the people who listen. And I hope you don't just have to listen to what I say. I hope you're learning something. And we're going to do more of a recap today to put things in proper perspective. I think that will be helpful. I'll update a lot of key levels, and I'll talk about, we got touched on how do you roll things in a bigger position. I got a couple examples for that. About time, Powell, yeah, it's about time. I think they realize that if they're not explicitly clear, the market will take it. Oh, they're going to pivot. They're going to pivot. And I still have people, idiots today. Idiots. Sorry for the people I'm referring to as idiots, but you're idiot. Well, what we meant by pivot was they're going to pivot to a 50 basis point hike. That's a pivot? That's not a pivot. You can't. And now, a 50 basis point hike is bullish, so we got to keep. But people just get stuff in their heads. Just like wait for the patterns. Don't get stuck in a mindset, either bullish or bearish. You trade the setups, you trade the patterns. All right. Yeah, George, welcome. When the first words out of his mouth were, this will be shorter than normal. Good afternoon, Davey. Once he said we're not going to pivot, yeah. And you started seeing, remember we talked about that shake and bake pattern? You got this break to the downside, a little bounce back, then that rollover play, and just riding the rotation zones down. And if you looked at the market internals, went to crap. It was just like, all right, any bounces back to the 8 EMA or the rotation zone, the 21 on the 5-minute or the 8 on the 15-minute, sell. Sell, 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 sell. And just keep lowering the stop. There's the rug pull. We got the rug pull. It's still, we'll see. We got to still go through our levels and the patterns. What the hell did Powell do? Did not expect that. No, I think it was more so that it was. I think Powell was just like, I think you guys are misinterpreting that we're really serious here. I think that was more so what it was. You're misinterpreting what we're saying. We're going to knock inflation out. We're expecting unemployment to rise. The markets are getting ahead of themselves. We're not going to say it's one and done. Yeah, we might be data dependent, but we're data dependent on the amount we're going to keep increasing, not data dependent that we're going to pivot yet. That's the message. Then I think the market's like, oh, what? Really? But what about our bull? What about all-time highs? What about the go-go gadget juice? Where's our go-go gadget juice? And you know what? That's where we sat. That's my take. So we went, and we'll recap this in a minute with price action. Hey, Daniel. Amadeus, the big short. Powell was good and on target. Hey, welcome, Genomic Stock. Powell acted like Fed chair today. Finally, he wasn't hedging and everything is, well, blah, 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 blah. You know, stop being a wet noodle. And I think all the Fed speakers were lined up. Even this week, when you take a look at the totality of everything that was said this week, I pretty much believe they were on. I mean, some differed with, all right, we're going to be more 50 basis points. Some differed with more, we're going to be more 75 basis point. However, they didn't vary on rates are going up. And we're not just immediately going to shift to cutting. It's going to be rates are going up and they're staying elevated until we think inflation is knocked out. So, people will just redefine stuff based off what they want to see. Don't be one of those. And I'm especially stressing that on the bearish case too, because this rally for the last few weeks caught a lot of people off guard. And then I know people short every day into it. And it's like until they finally gave up because it ripped their head off. That's why you don't want to look at blinders. That's why we always analyze both sides of the market. And then when there's bigger patterns that form, that gives us a longer term time frame to trade them. Is that we have a head and shoulder top on the daily in the S&P. So that's where we sit. Hey, AB. H, head and shoulders triggered an ES and app on the daily. If I'm seeing it right, we'll go through some of this. Is that a double top on NVIDIA on the weekly? We can look at some of this. Mike, the retest is a little realistic now. And we'll go through that too. With that, by the way, we got to do, all right. If you are new here or watching it on replay, please do consider subscribing. I think we are one of the better channels out there. And I don't think I'm not doing that to toot mine or Bob's horns. I think we're out there to provide some more balanced, fair and balanced coverage of the markets. And you know what? I appreciate all the subscribers. Let's go for 10. Let's go for 10,000 in the next few months. I think we can get there. What does everybody think? Can we get to 10? All right. So for complete, fair, and balanced coverage, I think somebody else used that phrase. So I'm sorry who I'm ripping off. I think that was Fox News, and I'm not saying that. I'm not a fan of anything. I'm not a fan of most things. I can't stand the news anyways. It's too biased now, one way or the other. Nobody reports actual facts. Everybody reports their opinion about the facts. Can I just get the friggin' facts? Just give me the numbers. Stop trying to tell me what the numbers mean. Consumer sentiment came in a lot better. I said, summer, gas prices dropped, consumer sentiment, happy times. Let's see what happens in the fall. That was inflation expectations still elevated for the 4.8 versus 5.2 coming in a bit, but that's still elevated. For the oil traders, rig counts going up. Good sign that the rigs are still coming back online. So here you go, bloodbath. Oh, look at little EA over that the takeover rumors. What was this? What was this little green thing? MOH. But everything else, there are not many places to hide. This is why you also trail your stops. FOMC 60-40, 75-50. It doesn't matter. We're going to get the rate hike in September. You're arguing about a quarter of that's not going to make or break everything. Everything's going to be broken anyways. We're already tipping into a recession. And what I said, if we start selling off, negative gamma accelerates, and you start to see this negative gamma accelerate, then you start to see increased selling pressure, especially from the dealers, because they had to hedge into this. Look at that drop in gamma. We were at neutral, and look how much it dropped just in one day. This essentially dropped from 0 to minus 650 gamma nearly in a day. That is substantial. That's why I point this stuff out. All right, where do we sit? Well, yeah, hit the mic button. I agree. Like the mic. Like this channel. It's not liking the mic. Sure, 10K. Yeah, 10K. Rolling covered calls on overpriced good companies is a wonderful cash machine. Yeah, and you can also sometimes at those points you can marry a put to it for the short-term basis. And then after the sell-offs, when we get close to the bottom, I love cash secured puts. I love those things. MMM got a lawsuit down big today. I did not look at MMM. Powell equals powerful. Oh boy, we'll just wait till he turns dovish again. Somebody find Tom. He's on a stretcher somewhere. I was hoping he'd show up, not to pick on him, but always to hear what his take was. And if it's still every day stocks go up. I love the red candle that triggered the double top on the SMH. 1 million followers. Well, that would be something. Let's just shoot for 10K. The S&P heat mag looks like bull. Yeah, they got ground up. All right. I want to do a sort of a macro recap. First, yes, this is a valid head and shoulders. Yes. Let me get some of these levels off. Yes. Shoulder, head, shoulder, triggered. Below the neckline. Let's just start there. Other stuff that I did, reversal. Let's take a look here because we had these levels. We got the breakout. We talked going into this morning about the shake and bake. Quick little reaction down. Gave actually a chance to get back up to sell. And then the secondary reaction, really nice. Again, stopping at that 41.54 area, then just grinding down slowly. So that level, and then here's the 15-minute with the 8 pushing the price, 5-minute just rotation zone, and it couldn't even get a more substantial bounce. This was just bearish. Even going into the weekend, look at this. There was hardly any covering. All right, let's pull off some levels here. So where do we sit now? Where do we sit? I put up the targets for the head and shoulders. 39.92. And I'm watching 39.92 to 39.84. So the 50% of this up move now and the first target on the head and shoulders. Again, we don't have to hit it Sunday night or Monday morning. You could always get a bounce to kiss the neckline goodbye. Next target, 39.39. The next official target, 38.86. I'm watching 38.86 to 38.89. Couple things. Asked question this morning. Now, if you were short this and you wanted to roll part of it into the position because it was going to trigger this massive head and shoulders, that's an example of rolling into a larger position. That's completely valid because you were going to trigger this head and shoulders and it was little doubt you were going to trigger it. So that's an example of, yeah, that's a good potential area to roll into a larger position. Or if you didn't want to carry over the weekend, you unwind your daily intraday short and look to put it back on a bounce. for continued lower. But this gives us a multi-day topping pattern. What's the next example? We come down here. Where's the next tipping point? So even if you complete this head and shoulders, we get the daily close or a weekly close below the 62.5 of this up move. You could technically roll some of the remaining part of this head and shoulders into another lower position. Why? Because you close below the 62.5. What does that favor? A return to the 87.5 to the 100. So could a remaining position, because you're going to reduce stops, and depending on here what you're doing, you can even take some partial off, but it's major reduced stop. So you lower your stop, take part off. That would normally be take the remainder off, but you get the close below that 62.5. You could then keep it going, or some of the position going, for the 87.5 to the 100. So yes, we do have bearish setups. Okay? Just for the point of completeness. So we don't get carried away. If I could draw it the right way. The overall stop right now, around 42.34 on a closing basis. A more aggressive stop would be what we call the walkaway trend line. So a close above this trend line. The better stop statistically from testing it out is a close above the 62.5. If you need a more, or you're more aggressively short, would be the walkaway trend line. If you need an even more aggressive stop, then you start ratcheting it down as this makes new lows, and you use whatever lower, the walkaway trend line or this 62.5. There's 3 different ways to do the stops, and I'll outline that on the next release of the Head and Shoulders course. But I'm giving people a heads up there because you want, if you're going to be in a position or thinking of it, you don't just go, oh, this market's going to tank. Yes, it could. However, you always, before you get in a position, you know where your stop level is, because if you don't, you can't do your position sizing and your risk up correctly. So you can't get stuck in the bearish, let's just ride this thing down to 0 or wherever it's going. No, we know where our stop is. Otherwise, what are we riding down? Because we don't have a proper position size. And just because this is tanked and you want to go, oh, Powell was hawkish, market's going to take out June lows, let's just risk it all. That's an idiotic statement too. You don't increase your risk because of what you think should happen. You always manage risk. Always manage risk. You can do cash secured puts on either, and I'm talking when we start making substantial bottoming moves, either in a stock or an ETF. Cash secured puts, why do I like them? I'll just deviate real quick. And again, I'm not advocating any specific trading style. Why do I like it? Because you can sell some puts, you know, where, all right, we could have a potential market bottom, and I'm talking a significant market bottom. Worst case is market moves sideways, edges down a bit, but you collect the money on the put, and you can always trigger a separate buy pattern. Or even if you get it put to you, you collected the premium and you get a discount. So you're all right, we're at a bottoming area. I can even get a bigger discount on the stock if you're looking to accumulate that stock only. Do not do it on something you wouldn't want to own. Hey, Anissa, thank you. Hope you had a wonderful week, and it's wonderful over there in Europe. Well, Apple, what do we say? It's 7% of the S&P right now, so there you go. Powell's a human Xanax. Oh, boy. Thoughts on commercial real estate? I think it's going to a retreat. easily. I would not be going all in on any real estate right now, especially commercial. I also put up the today intraday I was using from this peak. I'm just showing you what else I did from the 16th to this pausing bar low with your 12 and 25% harmonics. Those are those other lines to use intraday levels. Those would be key for reducing stops. And you see we just went through there. Now this other green line can be used for a Sunday night potential bounce as becoming resistance area. That's why I'm going to leave them on. So that's that. And now let's just do a recap, because I talked about, even on the podcast, Jim Iurio, coming up, watching for that tap of the 200, hit the 200 between the 50 and the 62.5. What happens between the 52 and the 62.5? Not guaranteed, but that's a high probability of the major rollover zone. We got the rollover. We got a little secondary bounce. And then we got the confirmation. This is why I said, wait for the secondary bounce. I'm sure a lot of people remember me saying that. And then let's see how it sets up for a bigger topping pattern. We just had the bigger topping pattern. Does that guarantee that we're going to new lows? No. It only guarantees the probability of this topping pattern. Nasdaq. Again, couldn't even get to that 50 to 62.5. Nasdaq, this is something I've been working with recently, because technically this is a slight declining to flat neckline. It's got to be traded as a flat neckline. Your targets, here is those same targets I used with just the harmonics, which gave me this 12,587, which is just dipped below now. Next targets are 12,365, and I have the 50% harmonic, so 12,365 to 12,404. Why would I watch that 50%? Because it's so key. So it's so close to that first target, I'd actually utilize this for dropping the stop. All right. The stop on this level, because you got to know your stops, 13,400 essentially. Or you use the fail-safe trend line. Right. This isn't, technically it's going to be a redraw here, but we don't have confirmation. So this is the technical fail-safe trend line. The next target, 12,135. Then I'm really focused on the second target of the Nasdaq this would be to take off a slightly more than normal. Why? Because you're right at this prior significant breakout zone. You see this? Right at that second target, right in front of 62.5. So this would be somewhere I'd be looking to take off more of a short position. And then if it closes back below 62.5, be more aggressive back to the downside. Next and final target is 11,906. And then you close below 62.5, you're looking to 11,400 to 11,076. I also, by the way, updated the back row targets if we do break below June lows, which I am expecting. 10,734, then major cluster area, 10,335 to 1044. Let me go back to the S&P, because I also updated those. 3553. Then major cluster area 3468 to 3491, 3500. So those are the targets that I'm expecting. I am expecting these June lows to be taken out. But, that's just the way we're going to go with that. Let's see. How long does it take to complete a reversal pattern to play out? This one should play out in the matter of the next couple weeks. Again, if I had definitive timing, I've done a lot with testing, and timing on this is, if I could give you an exact time, timing was all over the place. It really depended on overall macro conditions. That's why you can have a slower completing or a faster completing pattern. If I had to guess, this one will be faster completing. However, I can't give you a specific time frame. That would be irresponsible because in all the testing, there was no concrete time frame that tested out statistically relevant. Yeah, that 62.5 has been tested twice in the 10-year notes and held on the head and shoulder on the daily. That's 62.5 level. Learn it. It's wonderful. Dow? Again, look at how this is at 62.5 level. And look, we're closing right there and then boom. Head and shoulders on the Dow. This is an upward sloping neckline. Next targets on the Dow, pretty much the head and shoulders target and the 50%. 31.43, 31.943, 31.982. Then we got 31.569, 62.5, which again is not part of the head and shoulders pattern. That's a separate pattern. But you get the close below 31.367. We're expecting a return to the June low area. 31.557 is the final head and shoulders target. The Dow doesn't have any really great cluster areas, but the next major area I'll be watching, we'll have to fine tune this a little more, is 28,487 to 28,740, the next major area. Russell. We'll go over the stop levels later. I don't want to drag this out. It's summertime in, again, reversal off the head, off. Remember, this double bottom patterns. We always forgot about that. Hitting the key levels on the double bottom patterns and then reversing. Actually hitting that 1890 harmonic, same thing. We might see a little reaction just at this 37.5, 1885 with the 50 there on the Russell. Again, this has to be done with a flat neckline. 1874, then your first major target, 1874 would be even a little minor target if you're trading something more on a shorter term basis. First target and 50% are virtually in line right around this 1837, 1840 area. Then you got 1808. Then the 62.5, 1780, 780s, and then 1775, 40. Close below 1780, 780 favors a return to the June lows. And we could easily see some follow through Sunday night, Monday. I would not be surprised to see a minor bounce, and we can always kiss the neckline goodbye. Again, just as you don't have to go straight up, even on this thing, you did not go straight up. There were some there's some pullbacks. We don't have to go straight down. So don't get in the mindset that this thing has to complete in a day or two. That by Monday, we're going to be hitting new lows. Hello, Ramsish. I hope I said that right. You could be the is that the not the stuff for the hair, right? But Rogan for TA 1 million subs. I wish. You know, that'd be fun. I was making a joke about the hair. What is that? Rogaine? I could be oh man, I just blanked out on his name. I know who you're talking about. What's his first name? Boy, I'm sorry. I forgot his name. I hate that in a live stream. I guess I'm just an old fart at this point. Let me just show you. I haven't done it yet on the Russell. Yeah, Joe Rogan. Thank you. Sorry for having a brain fart. It's been one of those, I guess every week is one of those weeks at this point. Let me show you exactly how I'm doing the levels now. And this is how I did them on the S&P, Dow, and Nasdaq. I forgot to do it on, at least on this charting platform, on the Russell. I'm using the reverse harmonics. if we break to new lows beyond the June, and then I'm using the major top area forward harmonics. And look at what we have. So if we do, and I'm not saying we're going to yet, we could still come down here and weird things could happen. However, I'm expecting it to happen. If we break below 1640, now we have a roadmap. So everybody who wants something, what happens if we break to June lows? 1591.70, major cluster 1539. And then we can go over. And I didn't do this on the other charts. I'm just showing you what I'm doing. And we'll do it at some other point. But then we start looking. And look at this. This is more teaching. I'm just happening to use a Russell. I don't care if you trade the Russell or not. The point of this is to learn. Look, what do we spot here? Nice weekly into the weekly rotation zone. Rotation up, key close back from the 26th of October 20. Look at this. You can't make this stuff up. Boom, cluster. Right there, triple cluster. How's it a triple cluster? You have the price action, just a pure price action target. Then we have the 12.5% from this top to here, and we have the 25% from this reverse harmonic there. Boom, triple cluster. Brilliant target. Not saying that has to happen. We got a lot of stuff to chew through. We even got to get back below this weekly 200, which, look at this. You know, this should be one of the top TA channels out there. I think it should be the top. I'm going to toot my own horn. 62.5, 200 on the weekly. You know I talk about that 200 on the weekly right there. Look, you get the close below this level. Ooh, ooh. I love when this stuff just lines up. I love it. There we go. Am I weird for liking technical analysis so much? Off this little move on the DAX, close below 62.5. So we should be testing the July lows, which are slightly lower than the June lows in the DAX. Keep that in mind if you're trading over in Europe. Next key levels, let's just do the major areas. I actually went to the wrong one. I had to go to the July. There we go. 11,876, and my major target area would be 11,555 to 11,385. The other thing I would do is, because of where this sits, then very key is going to be 11,092. There. So we have a roadmap. I love roadmaps. We're not flying blind. VIX really told the story today. I have my retracement drawn from July 13th high on the daily. It rejected the 50% on the 15-minute, then retested and closed above the 62.5. And today, you're applying the tools. You're applying the tools. By the way, those levels are way old. I just sometimes forget to take them off on this platform. We continue, and I'm expecting this to continue with the sell-off. My next major target is 27.88 on the VIX. What else? I know we wanted to look at Apple. And you got the upward sloping. Neckline. Head, just to anybody new, down to the neckline from where it broke. Then you do it's the same targets as the double. But this is super nice. Look at the first target with the 200. So what am I easel? This is pretty much no. Is it guaranteed? No, but it's a no-brainer. By the way, you don't have. It's why I like that other stop. Technically, we'll get a redraw unless we get some rip your face off rally on Monday. This would be the walkaway trend line. Okay. But since you can't technically draw that yet, this is where these other harmonics come into play. 171.31. If you want more conservative, then you'd come. I mean, more aggressive, then you'd be 171.43. I mean, it's in the same area. There's your target. Next target. Look at that. 37F retracement harmonic from this move up. And this next target on your head and shoulders, you got the gap fill also here, and then 155.58. What are your targets for Tesla? So Tesla, actually, funny thing is, before the sell, look, funny, completed the little double pattern, and then, boom. Tesla closed below 62.5. We got this 283.50, 279.35. Doubles still in play. If it hits all the targets, 245.10. What are the targets the longer term now after the split? Oh, oh, oh. Oh, I'm such a nerd. 194.30. Look at this cluster. 180.13, 154.95. Let's just check this out with some retracement key levels. Because it's friggin' Tesla garbage. I gotta use these. These are the key lows you gotta use. So 164 to 154 essentially with the rising 200 is my next major target after we take out these lows. There you go. Isn't it nice having a roadmap to be able to construct trades with price targets? Tell me if you like the way we do this with the roadmaps. Bear better than beer. I didn't trade today. I was just watching the market crashing. I didn't expect a one-way move. I waited for a bounce, but it didn't happen. And when you get either the super bullish or bearish moves, you generally don't get the bigger bounces. That's why you got to follow the 15-minute and the 5-minute rotation zone down. And the more so you don't even get properly back to that 15-minute rotation zone, you also have to learn to follow the tick. Okay. The cumulative tick is the best one right here. Let me see if I can get it on the 1 hour. So I start watching for the short-term bounces when it dips below 1,000 to 200, right? 1,200. And then to see when you can't get sustained moves, especially above even 400 here, it's very weak. When the bounces don't even take you, when you start getting bounces back to 1,000, you're starting to get actual decent buying pressure coming in here. When you can't even get something sustained above 400 for very long, you see even here on the 50, it just bounce in there, bounce in there, bounce in there, and then quick drop. This is a very weak market. It's one of the ways I love to watch. That's why I have these lines on the tick, and if you follow the trend, you can also follow that. Where is it? There it is. Where's the other one? You can follow it here, and you can. It's just in trend mode. So, you know, I'm not going to get into all that right now, but those are other things you can use to help gauge the amount of buying and selling pressure during the day. Why is Tesla? Because it's more traded like a friggin' meme stock, Amit. And those are the last to die. It's got a cult following. Literally, people will buy this thing with their life savings, putting it all in there down to zero. Okay? That's why. It's not traded like a normal company. It's traded like a friggin' meme stock with a cult following. Ted likes the roadmaps. Thank you, Ted. Yes, on the approach to the roadmap. This is why I want everyone to learn the tools. Learn the tools, because then you can come up with your own roadmap. So the little double on the SMH first and second targets gave you a little double top. This was a valid double top pattern. Let me show you something here. This came into a valid double top real quick. You see it here? You broke down there. This was actually a minor double. Where was that? I have to show you this, even though it's horribly sloppy, this actually what is a valid topping pattern with the volatility. And look, first, second, third target hit. Then, here's another example. If you want to roll something down using a bigger move based off this, this is another example. Giving multiple examples of that, how to roll something into a bigger position. So you take something off, you lower your stops, and then it's like, all right, final target hit. And we're triggering now. It looks like we didn't officially trigger until the close because this was a great daily pattern. Looks like we're going to trigger this on the final. I'm going to roll some of this into the daily pattern. Next targets 217.22, 212.47, 207.79. There you go. Can I use my time machine back to 2008? You'll see the same rejection of SPX from 200 MA before the big crash. For you, Rich, the daily, were you talking about the daily? Do I have the date on here to go back all the way on the daily? I don't know if I do. Maybe I do. I know the weekly's there. Whee! I know I probably could have gone to the weekly chart, then changed back to the daily, but maybe I don't know. Hey, I saw the trend line from back there. Let me re-anchor it. Oh, wait. You mean here? Which time? Oh, because here's where I'm sitting with the futures. But again, retest here, rollover. This was the major retest I think you're referring to in May of 08. The snapback rally. 50 to 62.5% retracement. Remember, you watch for the rollovers in the 50 to 62%. 50 to 62%. 200 MA. Kaboom. Does that mean it has to repeat now? But no, there's no guarantees. Although the probabilities are in our favor. So that's where it's learn to be thank you for pointing that out, Rich. Learn to be, learn to, look at this. This is why, remember the harmonics I just put up? What would I just do here? The reverse harmonics, like I did on these other markets, right? Look at this. Reverse harmonic bounce. Then you got the next rollover. I'm just giving away. I'm giving away everything. Look at that. There you go. What did I just do for the most recent market action? I did the reverse harmonics, and I did from the top. And this is all the way back from 2008. Look. Harmonic cluster. Bounce. Next target. Oh, just a little dip below. Bounce. Then we can keep doing this. But this is how, see, this is why we do this stuff. There you go. Hey, anybody wants to do a super chat would be welcome. Oh. All right, I'm going to take the fast forward machine. The fast forward machine. Whee! So, what do we do here? Let me just show you with the I'm going to in case there's any doubters out there, I'm going to show you exactly. We're going to redo it. We're going to redo it. Reverse harmonics. Did I anchor that? I don't think I anchored that correctly. Hold on. There we go. Reverse harmonics. Forward harmonics. There we go. Oops, forgot to click again. Target area. Minor target area. Major target area. Okay. It's guaranteed. I wouldn't be it now. If you want to play something with some more risk capital, that would be the downside areas I'd use for option plays. Is that guaranteed? No, but we start getting the move below the 62.5 on a closing basis, and you break below these areas. That's the way I'd structure personally a options play for a longer term position. If you're looking to, especially on bounce back rallies where you get a little retreat in volatility, those are your levels. You could construct longer term option positions if you're excessively bearish. Because now then that's what I love about this. 34.70, 34.96. What strike do you think I'd use? 3500s. Right there. And it's not just because I'm picking a round number, because I have to use some strike, but if I'm using a longer term put position, let's say I'm even playing January leaps, there you go. I've now got a longer term strike. And why would I choose below 34.70 versus 34.96? I choose the round number right by the top of the cluster area. And then what would I use? If I was going to, or even, all right, we're getting down, I want to roll my put position, my put spread, or whatever I'm doing. I want to roll it down even more. I have another strike. 33.50. Kaboom. I have another strike to use right there. That's how you use this information. That's why it's handy to have targets if you like to play options. Because you can actually use the targets to construct your trades. Now, does that mean it's guaranteed? No, nothing's guaranteed. I actually don't wish, because then you wouldn't work. Because then if something worked 100% of the time, it would actually unwork itself. But that's how you construct trades. And then you manage your risk. Mike, we'll catch the recap later tonight and update my charts for Sunday's class. Thank you for all. You are welcome. I'm glad. Thank you, Amit. Hey, Genomics Stock. Big shout out to Genomics Stock for the super chat. Thank you. It makes some of this teaching worth it. Again, gives Genomics Stock some love on the channel. So BTC will go to 10K if we get a pullback. Bitcoin, I still have my levels on here. Longer term, my next major target area is 12,125 to 11,275. That's my next official major target. And if you want the tight targets just from reverse harmonics, it's this. But I also have the forward harmonics on here also. So that's your major target area, which has been on the charts for quite some time. And that 2008 chart looks almost identical to the chart on the 200 SMA. Broke above, sold off hard, and then flushed. Markets a lot of time do rhyme. That's why you got to be a student of the markets. Is that where the ABC pattern comes to play when we retrace back to test before going down? You generally get the 3 or the 5 wave patterns, depending if it's corrective or impulsive. Sometimes they're ABCs, sometimes they're more short-term impulsive. But yeah, you can start to look for either those 3 or 5 wave patterns. Good. Thank you, Patrick, for shouting out Genomic Stock. All right. I think this was a good session. I didn't plan on going close to an hour. This was good. What was fresh in our minds? There were lots of things to teach today. Think everybody should be able to take their own charts and help develop their roadmap. I'm going to tell you, Amadeus, to wait. I mean, they're still valuable. I've reworked some stuff. And anybody who did buy an old course, I will give, if you want to buy some of the old stuff, I will give discounts on the new stuff. So don't think you're throwing away your money. But if you want to just wait, I'm going to literally get some of this pumped out for everyone. You have a great weekend too, John. What is a greater effect on price action in the patterns, algorithms, or human emotions? I don't understand. What is greater effect on price action in the patterns? Human emotions have the short-term effect. Patterns have the long-term effect. Human psychology has a huge effect. That's why you somewhat see things repeat. Not exactly to the tick, but patterns repeat. Emotions, I'll give you an example. That's why short-term moves can be exaggerated. Like this. This is emotion. This is pattern. Emotion, pattern. So, longer term, it's human psychology which makes these patterns work. Now, can you get short-term emotion that overrules anything? Yes. However, you get the longer term. That's why a lot of these levels hold up. They're just, it's in human psychology somewhere, and it's unconscious. Hope that answers your question. You are welcome, Amadeus. You're welcome, Sterling. Yeah, you'll any stuff you bought, old stuff, you'll get a discount once the new stuff comes out. Okay. I won't. Everybody will be taken care of. Don't worry. I think you know me by now. I hope you do. All right, everybody. I'll be back on Sunday afternoon. I'm gonna enjoy the rest of my day. It's a beautiful day here, not too humid, and before long I'll be back inside because it'll be snowing before I know it. But so I'm gonna enjoy the rest of my day. I hope everyone has a wonderful weekend. I'll get out a sector overview at some point. I will be here Sunday afternoon, and we'll fine tune some roadmap for next week. Thank you, Ted. And the bigger compliment also would be if everyone says they're learning something, and they can literally, if I was hit by a bus tomorrow, they can carry on with a better understanding of the markets. We'll see. We know all sectors might be red, but there's what sectors are we going to focus on shorting? What sectors might we want to avoid? You still do your analysis. Don't get into and don't get blinded. I know there are a lot of bears in this channel. You still have to, anything can happen. It's why you use stops. Please don't get, I know it was a joke, but some people don't understand. Some people tune in later, watch this stuff, and, oh, I just sell everything. No, we still got to go through our analysis. I don't put things up for no reason here to just try to get more clicks. Trust me, the ad revenue's a bunch of crap. All right. With that, thank you everybody for tuning in. Hope you have a wonderful Friday night. Saturday, come back refreshed. If you can tune in live Sunday afternoon, I'd appreciate it. If you can't because you're doing family stuff, completely understand. Just watch the replay, and I'll talk to everyone then. Bye for now.